Good morning. This is Jerry Renz with Renz and Hanisch, Certified Public Accountants in Larchwood, Iowa. And today is Monday, April 6, 2020. Just to give you a little update on the options available to you under the CARES Act of 2020. And first of all, if you are a small business, something probably does apply to you. If you are filing a Schedule C, or if you are a partnership, or a C corporation or an S corporation, yes, you probably do qualify for some sort of grant or some type of a loan. Typically, and I should say, instead of actually receiving a grant, in all cases you are applying for a loan under either the Paycheck Protection Plan, the PPP, or under the Economic Injury Disaster Loan, the EIDL program. In both cases, yes, you are actually applying for a loan. However, you may have all or some of it forgiven, which becomes a grant. But in all cases, do understand that these are loans and you may be liable to repay them. Now, should you be taking the PPP? And in many cases, you should. However, if your earned income or your wages are less than $50,000 for the calendar year of 2019, then probably the more advantageous route would be to apply for the EIDL, the Economic Injury Disaster Loan. And what that is a $10,000 grant that is given to you. It's a very simple application. You just complete that form on the Small Business Administration website. Basically, you put in your business information, when you began business, how long you were in business, how many employees you have, what's your gross receipts. So if before any expenses, so total revenue. If you received a 1099 for $150,000, you would put in that amount of that 1099 for $150,000. Then you would subtract. They also ask for what did you have for any cost of goods sold. So that would be for any product or material that you purchased that for resale, that cost would go as a separate line item. They do not ask for any other expenses on that form. So if you received a 1099 for $150,000, but you had a loss or you had other expenses of $150,000, so on the tax return your Schedule C showed a break even of $0, that would not come into play. You should qualify for a grant up to that $10,000 based on that application. Now, you will actually, from our understanding, you'll receive a loan application that may qualify you for significantly more. Anything over the $10,000 would actually then be subject to repayment. But if you do receive those funds, those are supposed to be tax-free, provided that you utilize it for purposes such as making payroll, paying for rent, paying for mortgage interest, and that has an extended period from February 1st, 2020 through December 31, 2020. So realistically, in most cases, that will come up, should be forgivable in most circumstances. So that is if you're making less than $50,000 on a Schedule C, or as a C corporation or an S corporation, if you're paying less than $50,000 in wages and health insurance benefits. That is probably the easiest and most advantageous route to take. If you are a Schedule F filer, filing as a farm, at this time you do not qualify for the Economic Injury Disaster Loan. This is only eligible for Schedule C filers or entities other than active farm production activities. This is also an option that is available for nonprofits and churches. They should be looking at this program as well. There are limited funds. We're not sure how long those funds will last, so the sooner that you can file for these we'd recommend that you do that. So that's something that you should do. If you have any questions, please give us a call. We can help walk you through that more. So that takes care of the economic injury disaster loan.